Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Valesky, and we have Greg Harmon on the line. He is founder of Dragonfly Capital. Greg, how you doing on this Monday morning?
I'm doing great, Joel. How are you today?
We're doing good. We're doing good. So, we had Alcoa last week. I guess the unofficial start to the earnings season, and now this week we have all the big bank earnings coming out. Netflix on Wednesday here. Give us your outlook here for the upcoming week.
Yeah, sure. Earnings season for me is a year-round event. There's always someone reporting. And as a technical trader, you might think that PEs are not something that I look at, but earnings season is all about PE to me. And the PE for me is protecting. So using options to protect the positions that I have into earnings, putting on collars or put spreads, or if I've got a short position, putting on upside call protection. And then the E is exploiting. And that's something that we do in Dragonfly Capital. We take a look at how to trade earnings for a particular stock or two every given day using just options to exploit the volatility in the market and any particular direction that stocks may show into earnings.
Okay, so how would you exploit JPMorgan here? Finding some resistance at 62 over the last few sessions. Been some favorable, ink out in Barron's and some other publications about it. What are your expectations for JPMorgan, and how would you play it through the options market?
Yeah, JPMorgan is kind of a low vol stock, low volatility stock. It moves on average less than 2% off of any earnings report, and that's not really unexpected. Most of the banks are like that, given that they have the ability to, let's not say manipulate, but rather manage their earnings. You're right. I see the same thing at about 62.50 being a wall for it since about this time last year, and just trading between 54 and 62.50. There's a couple ways you can play this. I think that if you take a look at the weekly options, there's a huge amount of open interest at 62.50, but there's also a large amount below at 60. If you want to play the upside here, maybe putting on a 1x2 call spread against this. So maybe it's trading at about 61.70 now. So let's say if you use the 62.63 call spread, but instead of just buying the call spread for 30 or 40 cents, if you sold an extra call to the upside at 63, you get that same trade for near free. Maybe 10 cents, and have the ability to really leverage a move higher, just a short move higher that stalls at that same 62.5 level.
Oh, okay. Now that's an interesting call there. Also, macro events, they always shape, what's going on in the marketplace besides the earnings. And boy, we've had the Chinese market, perking up here. Give us your take on some of the shorter-term macro events that are affecting the market.
Yeah, I mean, we've seen over the last 5 years, up until last fall, the effects of quantitative easing in the U.S. marketplace, and now it's being exported around the world with Europe, Japan first, and then Europe, and now China joining the party. And really what this has meant is that all these currencies have moved lower against the dollar. Yeah, I still look for the euro to break through parity and drop down below 90. But these give you the opportunity to exploit trading opportunities in the foreign markets. We've been long ASHR, ASHR, the A shares for China for a while. The currency hedged Japan trade, DXJ as well. And I wrote something last week about Germany. It's still got another leg higher, I think, and that either the EWG or the HEWG are good ways to capitalize on some more upside there.
Yeah, so you're seeing some value outside the U.S. markets here. That's interesting as well. China, I mean, you're not getting bubble-licious or anything on that with the kind of move. I guess as the momentum's going one way, it's hard to stand in front of it.
Yeah, I think the thing with China is that it's such a macro wave going to help push the stock market higher that it's hard to call it a bubble at this point. It certainly looks like if I were to call one thing in the entire marketplace a bubble, China would have to be it if I was forced to call one thing. But it's been depressed for so long. The bounce higher, I could see the Shanghai Composite getting to 4,400 before the thing takes a pause.
Okay. Also, people like to look at the small caps, versus the big S&P index, the big stocks, also the triple Qs here. IWM is that gonna lead everyone higher here, kind of finding some resistance. Give us your take on the small caps.
Yeah, I mean, IWM has been the leader the past couple of weeks, hovering here just below all-time highs and looking strong the whole time. Where the Qs started to pop up to try and join them last week, but still a little bit of a lag there, and the S&P seems to be stalling out at 2,100 again. Maybe this time we get above it, but if we do get some strength in the Qs in the SPY, I think you start your next leg higher. But I've been for the last 4 or 5 months looking at what's called a four-wave in Elliott wave terminology. The fourth wave after a third wave higher is a corrective wave, but with the structure that's been in the market the last since 2009, this fourth wave looks like a good sideways wave to me, and it's been playing out in the S&P since October last year. Once we break that wave, you could have a whole lot more to go higher in the U.S. marketplace.
Okay, before we let you go, we got to get your take here on some individual issues in the marketplace. Starting out with Apple here, trading back above 128, trading up $1.14 and 128.24. Coming on kind of into the top end of the trading range. I guess a lot predicated on sales of the Apple Watch and also upcoming earnings. Long consolidation pattern here in Apple. What's your take on it?
Yeah, from a technical perspective, you had a breakout there over 120 back in early February, and then you had kind of a bull flag since then. And if we start to get above 129, this thing looks really good for another $15 higher.
Okay, and in the news, Pandora getting a spike off the Spotify valuation, had it trading up in the pre-market. I mean, kind of hard to trade a stock like this, but gapping up. What's your take on Pandora?
Pandora's been one that's really been killed lately. Well, not lately, but has not had a good time since March of last year, and starting to show signs that maybe it is bottomed. But for me, if it gets above 1950 or so, then it'll start to look interesting.
But if not, yeah, that trade's all over the place. How about Qualcomm here? You get some activists coming in and saying, they should break the company up into two different parts. Has a strong day on Friday. Trades much higher in the pre-market. I mean, obviously the activists aren't going to get their way right away. And what's your take on Qualcomm here? We did trade much higher in the pre-market session. Now it looks like we're coming back down to earth a little bit.
Yeah, it's technically it had been bouncing off of a falling trend resistance line since July last year, and this pre-market bounce takes it not even quite to that range. The bounce or the resistance would be at about 72.50, so it's got some room to there, I would say, as well, before you have any real strength or show of strength in the stock, other than just a short-term bounce. If it can get over 72.50 or 73. Maybe it does have a change of character and can start moving back higher to the 82.50 level.
Okay, let's move on. So, did you get in Netflix ahead of all these upgrades here? Earnings on Wednesday here. The parade of analysts just boosting this thing up over the last 3-4 sessions. A pretty unbelievable move here. If you were looking for a rally in the earnings, did you already get it?
I am not involved with it at present. I like the stocks immensely if they can get over 485. Uh, I'm not a huge fan of how it's moved up there the last 4 or 5 days with some gaps in the chart and smaller candles as it gets up there. And even today now, a little bit of it's early. What are we, 3 minutes into the session? But if we end up with a little upper shadow on today's candle, maybe we just cap it out at 480, 485 into earnings.
Do you
This
get
one is
tempted to
one of
short
those
something like this?
that, as you're aware, it can move a lot. It typically moves 12% or more on earnings. So that could be a huge move off of any information that comes out that day.
Do you get tempted to short something like that? I mean, it just goes up, 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 and all these analyst ratings, and really no substantial news. Is it, or do you just you're kind of bullish on it fundamentally, so you're not going to let emotion get in the way here of analysts tacking on 50 points over the last 3 trading sessions?
Yeah, I'm not going to get emotional about that. If you look at this year, once it gapped up in, I guess it's like January, late January, it's been trading in a pretty tight range. If you looked at it instead of being a $400-something stock, if you looked at it as a $4 stock, it's been trading in that respect in essentially a 60-cent range. So you look at it and say $60 is a pretty big range, but for a $400 stock, it's not that huge a range. And I would look even further back and say that it's bounced between 300 and 485 for a year and a half. This is a huge consolidation that's taking place bouncing around 400 as about a center. And from a technical perspective, then, if earnings as catalyst breaks it out of that range, it could move a lot. Back down to 100 if it's a horrible thing, or the move up into that range, a $300 move into that range would project up higher to about 700 if it were to blow things out. That kind of volatility is not one that I'm looking to short in any kind of long-term scenario. And for a short-term play, it's not in my nature to be short stocks with the broader indices favoring the upside.
Okay, good words of advice there. A couple of other stocks here. Just get a quick comment. Do you follow cybersecurity stocks at all? FireEye had a nice run last week. Seems to be giving some back. You got an opinion on FireEye? FEYE?
Yeah, I mean, if you look at that one technically as well, from May last year until early to mid-February, had really been in a range as well between 25 and 35. Broke out a little bit and came back, and that little bottoming area here, the late March into the beginning of April, kind of a short-term double bottom that's bouncing up higher, was really just a retest of that range. This thing looks like it's ready to turn around and start moving back higher to me. Over 46 would give me some really significant confirmation of that.
Okay, and one final one for you here. Under Armour, UA. Taking a look at that stock, busting out to new all-time highs. I know you like to buy high and sell higher. How about this one? Busting out over the double top at the 84.50 level. Moving higher here, and he takes on Under Armour.
Yeah, the chart looks really good here. It also went through a big consolidation from at the beginning of August and the end of July up until mid-January before breaking the range and starting back higher after a small retest in early March. Jordan Spieth's got the company on fire, I guess.
Yeah, boy, that was an unbelievable round of golf there by the youngster. We've been on the line with Greg Harmon. He is founder of Dragonfly Capital, joins us here on Benzinga's Pre-Market Prep, giving us his intelligent and well risk-reward ratios here in the stock market. Greg, thanks a lot for joining us, and we hope to speak to you again soon.
Thanks, Joel. It was fun.